My name is Mensa Ezekiel and welcome to KB Tutor. Today we are going to look at control account. Okay, we are going to look at control account and also look at sales ledger control account and purchases ledger control account. Good. So first of all, we have to know what control account is. Good. So control account is the summary of all the individual accounts or transactions in a given ledger. Okay. So we know that the sales ledger um, the sales ledger contains the what? Individual transactions of our customers. And the purchases ledger contains the individual transactions of what? Our suppliers. Good. So under control account, we have the sales ledger control account and purchases ledger control account. Good. And I said control account is the summary, okay, it's the summary of all the individual transactions in the what? Given ledger. Good. So if sales control account is the summary of the individual account, then we know that sales ledger reports our customers. So we can say that sales ledger control account is the summary of what? The customer transaction, okay, in the sales ledger. Good. So now, what we will do here is that we are going to summarize all our what? Individual accounts into one, our customer accounts into the sales ledger control account. Then when we come here, we know that purchases ledger reports our suppliers. So control says is a summary. We are going to summarize all the what individual accounts of our suppliers or the individual transactions of what our suppliers into this account. They get it? Good. So what I'm trying to say is that the sales ledger will show the detailed transaction, but the sales ledger control account or and purchases ledger control account will show a summary of the individual account. You get it? So let's say we made credit sales to customer A, customer B, customer C. Customer A, we make credit sale of let's say 500 to customer A, 200 to customer B, and 200 to customer C. Okay, the sales ledger will show the details of these credit sales under each of the individual accounts or the customer's account. But the sales ledger control account will sum all the credit sales up. Do you get it? So the 500 plus 200 plus 200, that's the 900. That's what we are going to see. Okay, because the control says the summary of the individual account. Good. Same for credit purchases. So if we receive, we know that the items that will be recorded under each of the accounts will come there. I'm giving you an explanation of what I just said because I said in the summary, right? So if we made credit purchases from let's say supplier A and supplier B, and the purchases amount was 500 from supplier A and 200 from supplier B, the purchases ledger will show the individual or detailed what transaction of that purchase. Okay, it will show 500 for supplier A and 200 for supplier B. But with the purchases ledger control account, it will sum them up, the purchases up. Okay, 700 to be recorded there. You get it? Good. Now let's move to the items or formats of this sales ledger control account. So after this one, you will come to the items which are not recorded in the control account. Good. So what we have to note is that the sales ledger control account is used to record the summary of our debtors, right? The people that owe us. And the purchases ledger is used to record a summary of what? The purchases ledger control account is used to record a summary of our suppliers. Okay, the people we owe. Good. Now, what we have to note is that under the sales ledger control account, items or transactions that will increase the amount we owe the amount our debtors owe us is going to be debited. Do you get it? Items or transactions that will make the balance or the amount our debtors owe us increase will be debited. And any transaction that will involve our customer that will make the amount they owe us decrease will be credited. Okay, if you don't get it, from the introduction to accounting, I said, we know that debtors are assets, right? Sales ledger control account is used to record our debtors. Debtors are assets. Assets. Increase in assets, the debits. decrease in assets be credit. Do you get it? Good. So I'm saying if there is any transaction that will increase the amount our debtors owe us, it will be debited. Then if there is any transaction that will decrease the amount they owe us, it will be credited. Good. So with the purchases ledger control account, the credit side shows an increase in the amount we owe our creditors. You get it? So if there is any transaction that is going to increase the amount we owe our creditors, we will credit. If there is any transaction that is going to decrease the amount we owe our creditors, it will be debited. Purchases ledger control account is used to report our creditors, right? Good. Creditors are liabilities. Creditors are liabilities. Now, from the introduction to accounting that I made, I said if there is an increase in liability, you what? Credit. So if purchases ledger reports are creditors, and we know that creditors are liabilities, increase in liabilities we credit because our liabilities is increasing. Creditors is increasing, we have to credit. Then if there's any transaction that will decrease the amount we owe them, we have to debit. Now, we move to the format. For sales ledger control account, they are assets, and we know that assets have a what? Debit balance. Creditors or liabilities have a credit balance. But it's not always the case that we are going to get debit balance for sales ledger and credit balance for purchase ledger. Sometimes we can get credit balance for sales ledger and a debit balance for purchases ledger. Good. So how the question will indicate these circumstances is it will give you the balances or the opening balances of, let's say, sales ledger control account. Then it will write CR beside it, showing that the balance has to go to the credit side. Okay, or it writes credit balance, so showing that the balance has to come to the credit side. But if it's just open sales ledger opening balance or 1st January 2020 without any credit, you should know that the balance for sales ledger will definitely come to the left side or the debit side because we have a debit balance. Same for purchases ledger. If the question wants to tell you I have to report that balance, opening balance at the debit side, it will show the DR, which means debit, beside the amount, showing I have to report the balance for the opening balance at the debit side. So when it's open or silent, we already know that the purchase ledger will have a what? Opening balance. So we just report the opening balance at the credit side. Good. So with the format, we will have our balance BDA. Good. And as I said, we can still have a balance BDA, a credit balance BDA. So let's bring it. So when there is none, we will omit it because there is not going to be a balance BD here and at the same time here. Do you get it? Good. So let me stop that one. So it's either you get your balance BD or you get a balance BD here. Good. So we have our purchase ledger control account here. But we know that it will have an opening balance at the credit side. Good. So in order for you not to forget, let's show the other balances. Balance BD, which it will specify that we are. Okay. We record here. And this balance BD, which the question will specify CR, recorded here. Good. Now we move on to the other accounts involved. Okay, so let's focus on this after that we come here. Now, the items, we are now going to record the items, or let's say the format. Okay, the item that will fall under sales ledger control account. Good. So with this, we will have our credit sales here, because when our debtors or customers make sales, okay, on credit, the amount they owe us is going to increase, because they've made sales and they've not paid us the amount the sales they made. They get it. So our credit sales will be here. Do you get it? Our credit sale, okay, is any sale that they make on credit. They've not paid for it. So if they've not paid for it, and they're owing us. So initially, if they owe that zero amount, now they owe us that credit sale they made. Do you get it? So it is increasing the amount they owe us. Okay. So when we come here, we have sales returns. And I said here decreases the amount they owe us. Good. So why sales returns is here? Because when they make sales on credit, they are owing us more. Now the sales they made, they've returned the sales. Okay, they've returned part or whole of the sales. So this is going to decrease the amount they owe us. So let's say they came to us and we made sales to them, they've not paid, and the amount was 10,000. And they said, okay, poor packaging, and for some reasons, the items we brought to them, some of them were damaged, so they brought it back to us. Okay, that damaged item, the amount of the damaged item they brought to us, that's the sales return. They are no more going to owe us for that amount, okay, because they've returned those goods back to us. You get it? So it's going to decrease the amount they owe us. So we may sell to them 10,000, then they return 500 of the goods. Isn't it going to decrease the amount they owe us? Yes. So the thing that will decrease the amount they owe us is going to be here. Good. So let's go to cash received. Cash received from customers. Good. So what we have to note also is that the items are recording credit customers. It is not involving cash customers. So anything about cash customers is not what needed here. It's only credit customers. Good. So we receive cash from what? Credit customers. Good. So cash received. Now we've made sales to them on credit. They've not paid. The amount they owe us in BC. Now we've received cash payment from them. Okay, so if we've received cash from them, what is happening to the amount they owe us? It is decreasing. You get it? Because they've made payment by cash. So the amount is going to increase. Sometimes they'll make the payment by check. So checks received. Good. So checks received is like a cash received. Okay, they've made payment by check. They moved the bills receivable. So this is just like a promise that, oh, I'll pay for the goods. Okay, so it's just like a cash received, check received. Okay, so it's from the buyer to you that, oh, the goods that you have bought, I'll pay for them. So if you pay for them, what will happen to your amount you owe us? It will decrease. You get it? So we have the bills receivable here, decreasing the amount the customers owe us. Good. Then we have dishonored checks here. Good. So now you are making payments by check. Then your check has been dishonored. Have you been able to make your payment through the check? No. You are still going to owe us that amount. You get it? So first of all, you made your payment. You received it by check. Nah, the check they dishonored the check. So now the payment by check has not been received. Do you get it? Good. So as this check received is decreasing the amount you owe us. Now your check has been dishonored. Dishonored. That means it has been rejected due to some reasons. Okay, maybe wrong signature, wrong tallying of amount, worse in amount and figures. You get it? So your check has been dishonored. So what is going to happen to the amount you owe us? You are still going to owe us that amount. It has increased. You get it? So first of all, this amount here, this checks here, you make payment by checks, which should have decreased your amount you owe us. But now your checks has been what? Dishonored. It's going to increase the amount. So if you want to understand it very well, you know that in accounting, when we want to cancel, we send it to the opposite side, right? So I'm breaking it down. So if you didn't get what I said, you've received cash here, checks here, you've recorded it. Now you realize that the check was dishonored. What do you have to do? You have to bring it to the opposite side to cancel out the check amount that was dishonored. Do you get it? Good. Now we move to the next item. We have discount allowed. Discount allowed. Discounts allowed. Good. So discount allowed is like the amount or the discount we allow to our customers. Okay. So if the customers have to pay 1,000 Ghana cedis worth of goods, okay, then we allow them a discount of, let's say, 500. So now you are paying what? 500. Okay, I'm using 500, 500. So let's say 50 cedis. You have to pay at 50 cedis. And we give them a discount of 10 cedis. Now they are no more going to pay the what? 50 cedis. They are now going to pay what? 40 cedis. You get it? So there has been a decrease in the amount they owe us. You get it? They are owing us 50 cedis for the sales we made to them. Now we've given them a discount of 10 cedis. Are they going to owe us the 50 cedis? No. They are now going to owe us the 50 minus 10, which is 40. Yes. So there has been a decrease in the amount they owe us by about 10 cedis. So our discount allowed amount will be here. Good. Then we have bad debt. Okay, or bad debt written off. Bad debts. Good. So bad debts are the debts that we know that these debts the customers are not going to pay. They get it. They are not going to pay, or we won't be able to receive it. So let's say an organization owes you, okay, and now the organization has collapsed. How are you going to get your money? You see that, oh, for this debt, I'm not going to receive it because the person that owes me, the organization has collapsed. So there won't be any operation of the business to even pay your debt. So that bad debt will be described here at the credit side because there has been a decrease in the amount you owe you. Okay, because you know that you are not going to get that amount. You are not going to get that amount you owe you. So you write them off. Do you get it? So you write them off to decrease the amount you owe you. Good. Now we have bad debt recovered. Good. Bad debt recovered. Now there was a collapse. I'm using that same example. There was a collapse and we saw that, oh, this amount we are not going to receive, so let's write it off. Okay, to show a decrease in the amount that our total debtors owe us. Good. Now the bad debt has been recovered because you saw that, oh, the person that was owing me has now started operation on the business is now has commenced. Okay, So he will now be able to pay me the debt that he's owing me. Do you get it? So now we will what? We'll cover the debt to show that the person is going to be able to pay us. So if there is an increase in the amount you are going to pay us, we have what? Debit. If you don't get it, I said if you want to cancel in your account, you send it to the opposite side, right? Good. Now you've written this off. You've written this off. You want to recover it. You want to recover it. Where do you bring it? Opposite side. You get it. Good. So this one will show the decrease. And this one will show an increase in the amount because you know that we are now going to get the debt or we are now going to get the amount that they were owing us. Good. Now we have refund. Okay. Refund to credit customers. As I said, we are not interested in cash customers or cash suppliers. Good. Now, refund. It increases the debtor's balance. Why? Because when we receive cash, we write it here as a decrease. Okay. When we receive the cash and we refund the cash back to them, have they been able to pay the amount they owe us? No. So it's just like the dishonored checks. So the refund, we received cash from the customers, and now we refunded back the money to them. Have they been able to decrease the amount they owe us? No, it's still going to remain the same amount. So that this refund will increase the what? Debtors amount. Do you get it? Good. So we move on to, let's check if there's any items to be recorded. Setup or contract settlement. So setup means that, in simple terms, let me make an example here. I'm owing you 100 cedis. You are owing me, let's say, 200 cedis. Then I say, okay, use my 100 cedis to cancel part of the amount I'm owing. You see, that's what we term the setup. So let's say I'm owing you 50, I also pay you 50. Instead of me paying you and you paying me back. So we say, okay, let's use the amount to cancel each other. That's what we call the setup or contract settlement. Good. Now we have interest on overdue balance. Okay, so this one means that like the amount you owe us, we've put in interest on it, so we are now going to pay more. Okay, so we place an interest on the balance that you owe us. So if you owe us, let's say 10 cedis, and we place an interest of 10 cedis on it, we are now going to owe us 20 cedis. So it's increasing the amount you owe us. You get it? So when it's increasing the amount, you see it at the debit side. Good. So I think that's all for the items to be recorded in the sales ledger control account. So after doing all this, do what? Balance it. Okay, so after every account, you have to balance. Now, normally we are going to get our balance CD here. Okay, normally this is where we are going to get our balance CD, but we can still get our balance CD here. Do you get it? So we can still get it. So when we get our balance CD here, that's the difference. So if we find out that after adding this part, okay, after adding these parts, the set of bad, the discount allowed, receivables, received, returns, and the BD, and we see that this side is greater than this side, our CD will be here. But if this side is greater than this side, our CD will be here. Then we'll carry or bring it down as balance but down here. If our CD is here, we bring it down as balance but down here. And this one will be credit balance, okay? Because normally we should have our opening balance here. For the sales ledger, we should have our opening balance here. Good. So we move to the purchases ledger control account. With the purchases ledger control account, the balance has to be here. Unlike the sales ledger, that normally we should get our opening balance here. The purchases ledger, we should get our opening balance here. That's normally. But we can still get our opening balance here. We get it. That's the debit balance. So the items that we see under credit purchase, under purchase sales are credit purchases. Purchases returns, returns as what? We have bills payable, we have discount received, we have set off or contract settlement, we have our sales test payables, so checks paid, cash paid, then we have, if you have a discount to yes. Let's see if there's any item that we are supposed to record under the purchases ledger. Okay, so interest on bills payable and refund. Let's see if there's any other item to be recorded. So I've been able or tried my best to get the possible items that you might or will meet in examination. Some of these items will not be in the question, but if you have all the items in mind, you will definitely meet most of them in the questions. Because most of the questions are not going to include all of these. You get it. So with this, as I said, the purchase ledger control account normally should have an opening balance at the credit side. So the credit side are items that will increase the amount we owe our creditors. Okay, so if we make purchases on credit from our creditors, we've not paid them. So the amount we are owing them is what increasing. Good. Then purchases returns. We made purchases, we returned the purchases to them. Are we going to owe them the amount of purchases again? No, we returned the purchases. So we are going to decrease the amount we owe them. Good. Then we have bills payable, just like the bills receivable. And a form of payment, we promising them that, oh, we pay the amount. It's going to what? Decrease the amount we what? Owe them. Then discount received. They've given us discount. Okay, we are supposed to pay 50 cedis. They said, okay, they've given us discount of 5 cedis. Now we are paying 45 cedis. So the discount we received was what? 5 cedi. So there has been a decrease of 5 cedi. So our amount we owe them has decreased. Therefore, we have to debit. Set off. As I said, we owe you, I owe you, owe you. Let's cancel each other. So as you are canceling each other's debt, it's decreasing. So we have to debit. That's why here we credited. We get it. Checks paid. We made checks to them and we paid checks to them. Okay, what is happening to amounts we owe them? It's going to decrease. Same for cash paid. Good. So refund, as I explained in the sales ledger, interest same here. So good. So with this one, you just have to balance the account. You have to balance the account after getting your items. Good. So normally you should get your balance CD here. Okay. You get your balance BD here. Good. So getting this, sometimes you can get your balance CD here, as I said for this one. Okay. Good. So our balance CD can also be here. It depends on the side that is greater. Okay, that will show where you have to record the what difference. So if here is greater than this side, you have to record the difference here. Okay, so we will first of all even calculate. We calculate even before getting the balance sheet. So if we add all these up and we see that, oh, this place is greater than this place, then our balance sheet will be here. Okay, but if we add all these up, okay, when we add all these up and we see that this place is greater than this place, then our difference will be here. You get? So it depends on where the difference will be. That's where you get your balance sheet. Okay. So don't be confused. Then we have, when the balance CD is here, it will be here at what? Balance BD. Here. Good. Then you are done with the what? Sales ledger control account and purchase ledger control account. So you can, either way you should do it is either you learn this in your head or understand the items. Okay, so for me, I would advise you to understand the items. But if you just want to learn it by heart or learn it the way you want to learn it by grabbing them into your head, okay, you can just capture this and know that, oh, this is going here, credit purchases is here, refund is here, purchase return is here, discount received is here. So if you want to do it that way and keep them in your mind, fine. But I would advise you to understand the item, what is happening to, what the item is doing in the purchase ledger or sales ledger. Is it increasing or decreasing the amount? You get it. For the sales ledger, when it's increasing the amount our customers owe us, we debit. When it's decreasing the amount they owe us, we credit. The reverse for purchases. When we are owing them more, we credit. When we are decreasing our debt, we debit. Good. So the items that are not included in the control account is cash purchases. Okay, good. Cash purchases. Now, as I said, this account does not involve cash customers. Do you get it? It does not involve cash customers. Good. So refund to cash customers is not recorded. Cash purchases is not recorded. Cash sales is not recorded. Then provision for doubtful debt is not recorded. Yes, this auto check for the other items that are not recorded. Cash discount. You see, the cash items are not recorded. If I say cash items, not the cash received and the rest, that's not what I'm talking about. Cash customers, okay? Cash customers, we are only recording what? The items of credit customers. Do you get it? Good. Good. So these are the formats and those are the items that are not recorded. In our next video, we are going to take an example, a question, and solve under the control account to get a better understanding of what I was saying. Until then, please subscribe, like, share this video to others so that they can benefit from it. Thank you very much.